On today's show, 3 questions. Number 1, how are the earnings? Number 2, are you paying more in taxes than necessities? And number 3, what's the state of the dental economy?
Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
And I'm Rabih.
Yeah, you are. And Rabih, we're just going to call it out right now. We're going casual Friday today.
It is casual Friday.
It's just casual Friday. We try not to wear hats or be too casual on the show, but today we're making an exception. You're just trying to make me feel better. I came in from working on the new house. I just closed on a house, which is
Congratulations.
awesome. Thank you. Very excited. Although nowadays, is it like congratulations or is it condolences? Because it's
I'm sorry for your mortgage rates.
Yes, it's tough. It is. I've got to basically just like look away and not only mortgage rates and how expensive. I forget how expensive it is to buy a house, not even just the rate in the house itself and how expensive, obviously, how high prices are now, which they are. And it's incredible what you have to pay to get what you get now. And it's extra hard to do that when you do it in a place you've lived your whole life. So I have the reference point of knowing what this house would have cost me even just 7 years ago. But more than that, buying the house, I'm just like things like closing costs. It's just it's insane. And I'm such a middle-aged dad where I just, the rite of passage of just complaining about like traffic and I can't go anywhere in this city without something being under construction. Like that's me now. And then I look at the itemized breakdown of the closing document and I'm just like, oh my gosh, like these fees are insane. So you try to be excited, but I know.
I'm imagining you lowering your eyeglasses to the tip of your nose and then shaking your
just
head.
Like, what is this? Yeah, exactly. Anyway, all that to say, bought a house. It's exciting. I'm trying not to ruin it by being the typical dad, like complaining about all the stuff. But it needs work. And so I've taken yesterday off and then most of today, other than coming to do the show with you, obviously. So that's why I'm casual because I've been working on this house and the yard and all this stuff. I worked all day yesterday, Rabih. I didn't finish up until 9:00 last night. And let me tell you, I'm feeling my age, my guy. I am feeling my age. I woke up this morning. Holy cow. I was like, yep, I'm nearing 40 because I used to do manual labor all the time and I would get up and be totally fine. I woke up this morning and I felt like I got into a car accident.
Ouch.
It was rough.
Well, to be fair, it's a different type of physical labor, right? Different muscles.
Yeah. I was working. I was working. I literally worked from all day other than like lunch break. And then I was just at it for 10 hours, 12 hours, whatever it was. So my hands are feeling it. I'm torn up on the hands, but you know what? We're here. All that long preamble to say this is why Rabih and I are wearing hats today.
Yeah.
Because I didn't want to get ready. So let's jump in, Rabih. How are the earnings? Tell us about the earnings.
Better than your hands. So let's just put it that way.
Seriously.
So earnings season is coming in full steam. And if you notice the market, it's kind of weird. We had a really good 5-day rally. We hit all-time highs across, the Dow and the S&P. Tech is still recovering, but they're not that far from their high. And that jump up has to be driven by something. And the 2 main data points that we've received over, I'd say, the last week was some economic data as well as earnings season. So let me start with the economic data. The advance for what we expect GDP to be in Q2 is only 1.5%. The expectation was the GDP will be growing at 2%, 1.5, a little bit lower. But once we decompose that 1.5, 2.12 is coming from consumers, and it's healthy across the board for goods and services. 0.53 is coming from investments, which is, data centers, the AI trade, etc. And it's looking healthy, except residential, of course. Government, it didn't contribute much to the economy, but then we've got imports plus minus exports, and that took away 1 point out of the 212 plus 0.53. So we ended up at 1.5. So what is happening with the economy is that the consumer is supporting it, putting the AI story aside, putting imports and exports aside, and the government aside. The consumption alone is growing the economy by 2% a year. If we look at it, you add the other stuff, we're slightly lower. Which, kudos to us spending again. We're not looking at how much
spending
credit card
again.
debt.
We're always spending. I don't know if we ever stop spending.
So we are spending.
I'm keeping the economy afloat with my closing costs, Rabih.
100%.
Alone.
Thank you for your service.
Yes.
But this morning we got economic data that the U.S. economy kind of lost 23,000 jobs this month, which honestly, 23,000 jobs at the level of the U.S. economy, this is not really different than zero. It's a rounding error. But we did not add new jobs. Unemployment rates dropped from 4.2 to 4.1. And now the market was happy-ish that, hey, if the labor market is slowing down, maybe now the Fed will not be increasing interest rates. So yesterday, the probabilities for interest rates next meeting were 45% would stay the same, 55% we hike. Because now jobs came weaker than we expected it, that flipped. Now we have a 55% chance that we stay put, 45% chance that they hike.
You betting on this? Are you betting on this? And
I'm not
Kalshi?
betting on this.
No?
Obviously not. But what is happening? What is happening? This story with the economy is historical data in a sense, and it's really dependent on what's going to happen with the oil deal with Iran, with the Hormuz Strait, and whether oil will drop down in prices. That will manage that narrative. So what will be important in that situation is what earnings are and where valuation stands. I'm going to give you the TD-LDR at the end, initially. Before earnings were reported, the forward PE for the US was 20 price to earning ratio based on next 12 months earnings. After, I'd say 60% of the S&P 500 has already reported earnings, we have gone up around 5%, but the forward PE ratio is still at 20. So valuations remain the same. Earnings went up and prices followed them. So what has happened across Dow and S&P is very healthy. It's like earnings came up, stocks did not become more expensive, they just jumped up. So let me tell you.
They're just following kind of lockstep.
So that was the TLDR. Let me show you what happened in terms of revenue estimates and earning estimates. For revenue, usually, how do we report? Just to refresh everyone's memory, how do we report these stuff? Analysts on Wall Street, everyone sits and follows a company and tracks its financials and goes on conference call and probably now has AI trying to find illegal data, all of that. And they sit and they put an estimate for what they think the revenue is going to be and what the earnings are going to be for that company. Earnings season at quarter end shows up and companies report. And usually, most of the time, because the companies know what the analysts are estimating at, they try to beat it. And there is a consistent surprise element of by how much they beat it. So the average percentage by how much the companies usually beat analyst estimates have been between Q2 2024 until like Q1 2026. Around the lower end was 1%, the upper end was 2.5%. In that range, you either beat the estimates by 1% to up to 2.5%. In Q2 2026 so far, our surprise above analyst estimates for revenue are at 3.9%. So you were expected to beat by an average of like 2. You beat by an average of 4. So that is a very big signal for the markets. And in terms of how often companies report above their estimates, it usually hovers around the 72 mark. The last 2 quarters were at the 79 to 78%. Out of all the companies that report, out of the 500 companies that report, are above the estimate. Some of them miss, right? So a very healthy revenue season. Very healthy revenue season. And in terms of earning, it's kind of the same. For the surprise magnitude for earnings, it's usually between 4.5 on the lower end up to 9 on the higher end. We came in at 8. So we are in the middle a usual amount of earnings as it happens. And the amount of companies reporting above analyst estimates are 84%. So earnings are in line, revenues are great, which tells us there is a lot of demand, especially that AI driving the markets. However, companies are still in this phase where they are investing so much that it's kind of depleting earnings. But they are smart enough that they're not depleting earnings or increasing their investment costs. So it
Enough to
depletes
miss earnings, yeah.
To miss earnings. They are, calibrating it, which tells us that people are doing their job. Like companies are working in their own best interest for their share price, which consumers working in their best interest to have a, fulfilling life work-wise and spending and consumption, all of that tells you that the machine is working well. And it might not be spectacular in one day, but over a very long time. This is why we hold stocks for the long run, because this mechanism of everyone trying to do their best in their own corner of the room just makes the whole room a big hole. If you want to think about it that way.
I like this. I love our analogies here.
Yep.
A big food hall. Yeah.
A big food hall.
I just had this question of the day. I'm getting this more lately, Rabih. I think there's maybe trepidation from people. We always say this. It's never feels like a good time to invest because it's either going poorly or it's going so well that it doesn't feel believable. And that's kind of where we're at, it's going so well it doesn't feel believable. Because we're on our fourth year in a row of double-digit returns, at least on the S&P. I had a client just this past week bring this up, kind of like, when's the other shoe going to drop? And I think that sentiment kind of is representative of what I think a lot of people feel. But I think that might just be human psychology, and that's kind of what I said is like, yeah, I totally get it. It's our fourth year. It looks like we're going to finish out the year strong. But to your point, it's supported. It is supported. Yeah. This doesn't feel synthetic, but it's interesting to me to hear people, like actual people on the street, as they say, the proverbial street, people being like, wait a second, this doesn't feel right. This is our fourth amazing year in a row.
Yeah. Well, feelings are more influenced by media articles, right?
Yeah.
Whereas the numbers are the numbers. The economy is being driven by consumer consumption and companies are making more money.
Yeah.
End of story. What does that tell you about stocks?
Yeah, that's it. It's just, and again, there's, like you said, things are just going well. We'll get more into the numbers around like sentiment in the dental space and the economy, but it's good to see. Okay, anything else to add on the earnings front or revenue front?
No,
all good.
Front, we have nothing to worry about for 40 days, macroeconomically speaking. Geopolitically, I don't know, but macroeconomically, 40 days, the Fed will meet. From now till then, we chill.
Yeah. we just chill. Okay, we're just waiting. Yeah, and then we'll just continue to deal with the daily ups and downs of what's happening in Iran. No one ever knows.
Yep.
Now there's another possible peace deal on the table. Maybe, we don't know. They're trying to close this out, but no one knows.
I don't know.
Yeah. When Rabih gives up, it's a problem. Yeah. It's a problem. Okay. Number 2, are you paying more in taxes than necessities? This one felt really pertinent for dentistry. So I saw something come across my ex desk, we'll say. And so a guy posted just a chart, and it said very clearly that Americans are now spending more on taxes than on necessities. Specifically, what it said was more on taxes than food, clothing, and housing combined. So let's start there first and then kind of break this down. Rabih, I guess I'll first ask, when you hear that, without going into any more nuance, but just this general kind of top level fact that U.S. taxes now exceed American spend on food, clothing, and housing. When I first said that to you before we got on, you were kind of like, yeah.
Makes sense.
Yeah, you're not shocked by that.
No, we have a progressive taxation system, which means the more money you make, the more taxes you pay.
Yeah.
But necessities are necessities. How many calories do you want to eat a day, and how many jackets do you want to put at the same time?
Yeah.
So those are limited in their upside. Taxes aren't.
Yeah. Totally with you. I've never really necessarily, I don't think about this too much, but when they broke it down, I was like, I think my initial thought was like, wow, that's kind of crazy. but then you dig into a little bit more. So I wanted to kind of break this down. So again, the original verified statistic is that the U.S. taxes in 2025 generated $8.19 trillion. Like that's what we paid in taxes as a country, as citizens. That exceeded what Americans spent on food, clothing, and housing combined, which was $7.39 trillion. So that's the overall kind of like top level stat. Now, a little bit of nuance here first. So housing and healthcare are by far the two biggest expenses that American families pay for. So if you remove clothing and add healthcare to that necessity category, or you look at shelter alongside food and medical, so the true necessities, you'd have to include, I think, healthcare. This is where I think the number gets a little bit skewed because the original data point did not show healthcare. If you add healthcare in, that's not true. We spend more on things like that, or healthcare and all that combined. But here's the real, I think, part where this gets a little bit skewed and where it impacts dentists for sure. And you might need to pull over because this might make you angry if you're listening to on the road. I think this created a lot of anger online, which I totally get. I can understand that anger. But because you were talking about the progressive tax system, so this is skewed because of people like dentists, right? So the high earners, the top 20% of earners in America pay the vast majority, if not basically all the taxes. If you look at the top 20% of earners, which again is a lot of our clients, is a lot of dentists, they are paying the vast majority of taxes. So the massive tax bills that they have pull the national average up artificially. So, which actually makes this worse for people like dentists, because dentists, we see the tax bills. I would say in a lot of cases, it's like a no-brainer. They're paying more in taxes than they are on necessities. The bottom 60% of American households, they pay significantly more for basic necessities like rent, groceries, medical care than they do in taxes. But again, that's because of our progressive tax system. So I'm going to stop there. I just thought it was an interesting talking point, interesting, maybe obvious, but something that I haven't really thought much about. What are your thoughts, if any?
I have two. The first one, I was surprised that they did not include transportation, right?
Yeah, I don't think it
Isn't
did.
transportation usually up there next to housing and medical expenses?
Yes, that's kind of why some of the pushback on this was like they handpicked certain things to make it look worse. So yes, the category specifically that they put in here to compare was food, clothing, and housing was the three. They did not include healthcare and they did not include transportation. So I think, if you added those in, the true necessities being also healthcare and also transportation, the numbers don't look as crazy probably.
The second point I have is that this is probably a good thing. So go back to a blank sheet of paper, right? And you're trying to introduce tax policy on a country, right? You can tax everyone the same rate. You can do a progressive tax system like we have in the US. You can only tax the very wealthy and they give a lot of welfare to the poor. And I'm not going into like the politics of it, but there are so many different systems where you can extract tax dollars, right? From different proportions. The whole idea of a progressive tax system is to give the people who do not make as much money a bigger chance at climbing up the socioeconomic ladder, right? So what this tells us that most dentists have made it, and they're kind of paying for the others to make it. Where does this become, which is a good news, because and this is not me saying stuff. This is the data. If we look at median real earnings, median real wealth for the last 40 years, 50 years in the US, it has been climbing up. So people have been going up that socioeconomic ladder. Our quality of lives have been getting better. And part of the reason it has is because the tax system is progressive. Whoever is coming from less means can still go up because financially on pen and paper, they don't have as equal of a tax burden, right? Where does this become a problem is that when the progressive tax system actually works, people migrate up, but now everyone's stuck in a high tax bracket. where the amount of people remaining to bring them up isn't as high, but the bulk is now concentrated in higher tax rates, and that would just make it harder for people to move up. So what you would do in that sense is that you'd shift the scale up. And we see it actually in our tax brackets every couple of years, right? We see that the standard deduction slightly increases by probably $1,000. We see that the amounts on the brackets change. The question would be, is it moving up fast enough with as fast as people are doing, or is it too slow? But I think personally, we're still at a good place, or else we wouldn't have seen increases in productivity and increases in real economic growth. But it's really a matter of that progressive tax system, that ladder of taxes, whom does it help and whom does it kind of relatively punishes? I'm not going to say punishes, but relatively punishes, and whether it is positions correctly above how many people belong into each group to make sure the economy keeps trending at the same growth rate that it has.
Yeah. No, that's a great explanation. And this is always something we have to walk the line of sensitivity around, like this getting into politics, and which we don't want to do. But what I'm hearing you say, although not perfect, the system is proven, and I'm glad you brought this up, because although not perfect, the system is working. The system has worked in a general direction. Yes. What we're trying to accomplish, which again, politicians on either side or political parties on either side would argue that based on a lot of different factors. But generally speaking, the system has worked over the last 40, 50 plus years, longer than that, really, since the foundation of our country. But so I'm glad you brought that up. It's the system is working. The adjustments are there based on not having a concentrated pool too much of the high earners. But again, as you see it, Rabih, it is true. The top 20% of earners are paying most, if not all, the taxes in America for the most part, for income tax, which dentists are hearing. This is why this is such a topic for us when it comes to dentists being like they might be sitting there being like, this is not working. It's not working for me because look at our tax bills. And we feel that we're having these conversations on a regular basis. It can be painful. I think where I saw a lot of the anger, at least online, which let's just be honest, online is not the same as the real world. We're acknowledging that. But I do think there's a general frustration when it comes to like dentists that we talk to of like, what am I getting for that high tax bill? I think that's where it breaks down a little bit.
Yeah. That's where politics come into play.
That's where politics come into play, which we won't go down that road. But I do think just acknowledging that general sentiment is out there. Like, it's not necessarily the taxes. It's like, what am I getting for those taxes? That's where people start to struggle, especially when you put it in the context of I'm paying more in taxes than to live my regular life. And it becomes a real struggle. So anything else you want to add to this, Rabih?
No, I'll just summarize by saying that the tax system right now is not perfect. And one of its disadvantages is that there will be a situation where it's so absurd that you pay more taxes than for your absolute necessities. But that exact structure is what allows a lot of people to improve their quality of life. And as an aggregate, allows the economy to grow.
Yeah, it's great. So you're saying stop worrying about your tax bill. That's what I heard.
No, it's not.
I'm just
stop worrying.
I'm just trying to get you in trouble.
It's more of let's learn the pros and cons of it and make sure we're there to keep. The whole point of the tax code is to make the system coherent and sustainable. So let's keep our eyes out to keep it as sustainable as we can.
Yeah, totally agree. Okay, last topic. It's a big one. What's the state of the dental economy? We've done this before. And we're going to do it again because the ADA and Health Policy Institute just released their Q2 of 2026 around the state of the U.S. dental economy. So they talk about things like dental economic confidence, consumer dental spending, dental practice economics, and the dental job market. So let's first break down. And I guess, should I share my screen here, Rabih, for our YouTube?
Yes.
Since I screw this up all the time.
I'll make sure it is sharing.
Yes, please do. Okay. We're on YouTube now. So
we're on.
There we go. So first up is the dentist economic confidence. It's trending up. So we had a peak. So kind of some good news here, but still something to be looking into, as far as it's trending up, but not as high as it was at the end of Q4. So they show a couple of different things here. Dentist confidence in their particular practice is up over 60% now. In the general dental care sector, it's up. And then the overall U.S. economy, it's up. So we've got 60% saying they're confident in their practice, just over 50% in the dental sector, and then just under 40% in the overall economy. But again, trending upwards, which is a good thing. Any thoughts on this, Rabih?
I think it's worth noticing that dental, whether it's a practice or a sector, are both above the U.S. economy as a whole.
Yep.
Which says something.
Yeah, it definitely does. I noticed that as well. If you compare this to the consumer economic confidence, has been trending down. We've talked about this before. It's been trending down since 2023. We're now at 48 on the famous University of Michigan, which is a historical low. Again, kind of interesting, Rabih. This is still something to talk about where there's still a separation of this. This is what I was saying earlier. People not feeling as good as what the market at least is showing, or what the economy is actually showing. I think a lot of this just comes down to the big three when it comes to real housing, healthcare, and school. Those are the big three that have become so insanely expensive. And I think that's kind of what's led to this. What are your thoughts?
I agree on that dental specific analysis of it. But if you allow me to zoom out slightly with this chart, because this is, across the whole economy, I'm not saying causation, I'm saying correlation. But once you look at the correlation between consumer confidence and financial asset returns, especially US stocks, you'd see a very stark and strong negative correlation. The lower the consumer confidence, the higher the 5-year return on stocks usually.
Really?
Yes.
Tell me more about that, Rabih.
So, really, I'll tell you. Okay.
No, so I'm being serious. I want to know that.
I thought you were being sarcastic.
I'm being serious. Tell me more.
I'll pull up the chart next time we talk, but usually during periods when there are bubbles or euphoric segments in the market, think .com bubble, think '08, think GameStop and the whole, meme stock frenzy. All of these periods, if you look at consumer confidence, and this is quarterly data points, if you look at it on monthly recordings, because this report is monthly, not quarterly, so you get more data points, you see that those tend to peak. The consumer confidence tends to peak close or around these periods of euphoria in the markets where there's greed, etc. And usually when it looks like things are not looking good, during COVID or during '08 or during 2022 when interest rates were high, consumer confidence drops, right? And you can see it on this chart specifically it shows that it was dropping from 2021 by Q2 2022 Q3. That was a local minimum. Consumer confidence dropped, but then the stock market went up, and then consumer confidence followed up with it. So our confidence is influenced by what you said, those big three: college, housing, and health, etc., student loans, and also by how wealthy we feel we are. And stock market tells us and makes us, kind of indicates to us how wealthy we are, our 401ks, etc. So there is a link. I'm not saying a causation, but there is a link between consumer confidence and stock market. And usually when confidence is low, it means that stocks have been low for a while. And when stocks have been low for a while, they usually can tend to rebound on the long.
Yeah, but what's crazy about this, Rabih, so let me make sure I understand that, and that makes sense. There's a connection or some correlation to consumer sentiment and the stock prices. But am I wrong for being confused where we're seeing from 2023 Q4 a pretty decent drop, a consistent drop, and in 23, 24, 25, and now 26, we're seeing a huge run in the stock market? Am I right to be a little confused at the separation there, or the negative correlation, or is that you're saying that's normal?
There is a negative correlation. When consumer confidence goes up, we tend to see forward returns that are lower than average. And when consumer confidence is very low, we tend to see forward returns that are higher than average.
Got it. So it's almost like one lags the other.
Yeah, they kind of go in opposites. Yes.
Got it. Okay. Interesting. Okay. I like our little side quest there. So getting back to specifics of dentistry. So why dentists feel confident in in this sector. Top 5 reasons. Number 1, they state dentistry is always needed. So 40% responded with that. Number two, 23% responded with strong demand and just the busyness of their practice. 17% said positive economic outlook in general. 8% said patient demand exceeds supply of dentists in their area. And then 8% also said patient awareness or just the value of oral health. So again, this was of the 50% who said they were confident and positive about the market or the dental sector. Those are the top 5 reasons. The 25% who said they were skeptical listed 5 specific reasons. Number 1, low in reimbursements and insurance pressures. I'm actually shocked this number is not higher. This feels just like overwhelmingly the top thing. Number 2, so that was 35%. Number 2, 25% said patients unwilling or unable to prioritize dental care. Number 3, just over 21% said rising practice costs / inflation. Again, I'm shocked that's not bigger. 21% also said they're worried about the U.S. just economically, coming maybe a coming downturn. And then 11% said rise in corporate dentistry / DSOs. I don't have this in front of me, but I need to go back and see that last one. That has to have come down. Only 11% now saying that they're worried about DSOs. I would imagine a few years ago that was much higher. I got to go look at that. But any thoughts on this at all, Rabih?
No, it makes sense because all of these are actual factors that influence your practice itself, right? Like if there was on the list here, there is U.S. economic downturn, but it's level 4, right? It's not the top 5. But if someone says, "Oh, Nvidia's price," I would be worried. Like, what are you focusing on? But here, it is really stuff that matter to your dental practice.
Totally agree. Consumer dental spending was another big section they talked about. So consumer dental spending is up 1% in the last 12 months. You can see basically a nice trend upwards ever since 20. I mean, obviously COVID was just a wild, aberration there, but pretty much from 2021 when things sort of normalized post-COVID, it's just kind of been creeping up overall. So consumer spending up overall, about 1% in Q2 or the last rolling 12. Interesting little data point here that dental spending lags overall healthcare spending over the last decade. So physician services is up 46% from a consumer spending standpoint. Overall healthcare is up 39%, where dental services specifically is up 24%. I don't know if there's a lot of shock there, not a lot of surprise, but just dental services in general lags the overall healthcare market in spending. But again, not really a surprise. What are your thoughts, Rabih?
Well, I think the data is skewed by Ozempic.
Yeah, probably. That's probably a good call.
Right? Healthcare is like a much faster and a faster slope compared to dental services, and it's probably because there's a hype for GLP-1.
We're blaming that on Ozempic. I like that. So dental practice economics. We did this last time. They do this every single quarter. Kind of interesting data points here as well. Dentists are feeling busier in Q2 2026. So I'll just kind of break this down for anyone not watching on YouTube. They break this down into 4 categories. So category 1 is too busy to treat all patients requesting care. Category 2 is treated all patients requesting care but overworked. Category 3 is treated all patients requesting care, not overworked. And then category 4 is not busy enough, could have treated more patients. So we'll just start back from, what I just mentioned and go backwards. So the category of not busy enough and could have treated more patients, that was 26% of those who responded. That's down from 32% in Q1 of 2026. Treated all patients requesting care not feeling overworked, 41%, which is up 4% from last quarter. So feeling like a good middle ground. And then category of treated all patients requesting care but feeling overworked. So nearing that burnout level, that was 21%, up just slightly from Q1. And then the category of too busy to treat all patients requesting care, this is like burnout zone, remained the same and has really remained the same at 12% or 12 or 13% really since 2024. So about 12 to 14% of dentists are feeling burned out over the last couple of years. Any thoughts on this, Rabih? That was kind of interesting.
Yeah, it seems like the one in Q2 Q2 2026 that took the biggest hit is the not busy enough that shrunk. So that could tell you that there is more demand, but the too busy to treat all patients maintained its 12% level. So even with there's more demand, you are as productive. It didn't actually make you less productive.
Yeah, it's great. Appointment wait times. So appointment wait times for new patients went up slightly in Q2 compared to Q1. So that's an average of 13.9 days, but are still lower than the peak, which was Q2 of 2024, which I believe was like 14.7. So pretty consistent there. Not a shock here. Dental practice expense price index increased. So since January 2021, prices for dental equipment and supplies increased by 23%. Hourly earnings of dental office staff also increased by 23%. During this period, overall inflation has been 27%. So from January through June of this year, prices for dental equipment and supplies increased by 0.2%, hourly earnings of dental office staff by 2.2%, and then during the same period, overall inflation has been 1.8%. That's all annualized. So again, not a shock here that their dentists are feeling the squeeze. So that almost, to be honest, when I read that, I'm like, that actually was maybe lower than I would have even expected. Maybe I feel like the feeling of expenses going up doesn't necessarily match the reality, but not a shock that it's up. And then here's the big squeeze that we're feeling, the dentists are feeling, is not only are inflation numbers up, but the reimbursement rates are lagging inflation. So since 2021, the reimbursement rate index averaged across all payer types increased by 19%, while inflation was 27% over this time frame. That's not great, Rabih. This is kind of the unique issue that dentists face, is they have, just like any other business, inflation. They have inflation within their own businesses when it comes to hourly wages. They got to pay their workers or equipment or, whatever it is, supplies. They, just like every other business, they have that. The issue is that unlike most small businesses, dentists don't have as much control or power over what they can charge because they're dealing with the intermediary being insurance companies. That is a uniqueness and a unique struggle and pain that we hear and we understand. Like that's tough to deal with. Any thoughts on that, Rabih?
No, this is... I honestly, Christine came to mind because she would know exactly how to not be in such a position where that affects your business, right?
Yeah.
She would have a lot of valuable insights there.
Totally. We have Christine, for those of you who don't know, that are listening, Christine's our dentist advisors, our in-house practice strategist. She's incredible and having a lot of these conversations all the time. We just did a 2-part series. I think they just released the first part, Christine and I, around going out of network with your PPOs. So should definitely check that out. That was the episode, I believe, that dropped this week. So you're totally right, Rabih. She's a brilliant resource to have for stuff like this. This is kind of interesting. Dentist intentions versus actions in 2026. So dentist plans for 2026 as of Q4 2025 versus the actions taken in Q2 of 2026. I don't think I saw this in the last report. Kind of interesting. So we'll just go down the list here. Dentist plan for 2026 as of Q4 2025. Number 1 category was they intended to add staff. So over 42%. So they were going to add staff, but only 39% actually did. Not a crazy gap there. This one's interesting. 35% of dentists said they had the intention of dropping out of some insurance networks. They're going out of network. Only 24% actually did. So a pretty big gap there. 17% said they said we're going to invest in new software. 17.5% actually did. So that matched up really well. 24% said they were going to make a major equipment purchase, where only 16% did. I wonder if, again, that's just kind of this gap or this squeeze they're feeling of increased costs. 8.6% said they were going to reduce staff. Only 6.5% actually did. And then join dental insurance networks. That was 3.2% who said they were going to. Only 5.6%, or sorry, more than that. So 5.6% said they did. So anything that stands out here, Rabih, or that's a surprise?
The only two that, your actions surpassed your plan were investing in a new software more people invested than they planned to.
Yep.
And in joining insurance networks, more people joined than they intended to. Other than that, they all slowed down,
Yes.
whether it is adding staff or reducing staff. You just did not fulfill that plan that you had, which I find interesting. It just means that outsiders were able to sell you,
Yeah.
right? Whether it was a software or joining a network.
Yeah.
But
I also think this comes down to possibly just a psychological part of like the knowing doing gap, right? So like, I know I need to do these things, right? Or I have these intentions, and then life gets in the way and then you don't do it. I think part of that could just be this or that showing up here as well. So the dental job market, so U.S. economy, adding jobs at a faster pace in 2026. Rabih hits this all the time, but job growth accelerated in the U.S. economy after February 26. 57,000 jobs were added in June 2026. Rabih, you can confirm that data?
I can confirm. Just the last reading was negative. So that trend kind of is flattening now.
Flat now, yeah. In the dental sector specifically, employment resuming growth. So in June 2026, the total number of jobs in dental offices was really unchanged, but you can kind of see an upward trend. So it's up 1.5% over the last 12 months. If you look back, from let's say like even, summer of 2025, really over the last, it says 12 months, but like you can see that upward trend on the chart. And if you go back even farther, again, it kind of flatlined for a while from like end of 2024 through 2025. And now there's been pretty decent uptick and climb on the employment front. The one that all dentists know is a struggle. Dental hygienists, definitely the hardest group to deal with and recruit. There's just such a shortage. So nearly 2 in 5 dentists were recruiting dental hygienists in Q2 of 2026. That's pretty much unchanged from Q1, slightly down. So among these dentists, the vast majority report recruiting hygienists is very or extremely challenging. This trend has been consistent over the last 2 years. Not a shock. Hygienists have just been really difficult. And then dental assistants, slightly less difficult, up a little bit, but kind of the same thing, right? It's still been difficult to get staff in the office. I think we'll finish with this, Rabih. There's a lot of talk around AI. I think we'll just hit this really quick. So 2 out of 5 dentists currently use AI. I do think this is interesting, Rabih, around the use of AI. I think there needs to be probably more nuance here around, you ask a dentist, how are you using AI? And it's like, well, I'm using ChatGPT to like...
The next slide.
I guess down here. Okay, here we go. Well, let's break this down really quick. So 43% say they currently use it. 26% say they do not use it, but they have intentions to. And then 30% say they do not use it and do not plan to. I think that's the old established docs probably. So, okay, here you go. You're right. I didn't see this. I got to call myself out. So for which of the following tasks do you use AI in your practice? They actually did go really deep into this. So top AI application. So dentists are more likely to indicate they currently use or plan to use AI for imaging diagnostics as well, for administrative tasks related to insurance, verification, charting, all this stuff. So for imaging and diagnostics, this is the biggest use. 23% said they currently use, and then 25% said they're not, but they plan to, while 52% said they're not, and they're not going to use that. Any thoughts on that, Rabih, or really any of these?
No, and it makes sense in imaging diagnostic. Like this is where AI does it better than the humans, right?
Yeah, I'm actually shocked that only 22% are, and 52% are saying they're not going to use it. Kind of surprises me. Insurance verification, 14% say they're using it. 33% say they plan to, and then 54% say they don't. And then it just kind of drops from there. We don't need to go through each and every one, but down to the lowest being appointment scheduling treatment recommendations. Basically 83% of the space said they're not going to use it for treatment recommendations, which again, to your point, it doesn't really surprise me. Like charting and note taking, image diagnostics, insurance verification, some of like the administrative tasks are the biggest categories. And then you get down to like actual treatment recommendations. very, very small percentage saying they're going to use it for that. Not a huge shock there.
Yeah, like if you're going to allocate AI resources to these, do you want to be a dental practice that has AI run its administration, or do you want to be an admin firm that has an AI doing dentistry?
Yeah.
You'll have to choose.
Yep, exactly. So last thing on the AI usage. So dentists, just the mixed feelings around overall. So the question was, overall, how do you feel about the expanded use of AI in dentistry? Top 5 reactions. Number 1, generally optimistic about the potential. That was 22%. Number 2, AI is a tool, should not replace clinical judgment. That was about 18%. Number 3, negative, generally opposed. That was 14%. And then skeptical/nervous was about 10%. And then mixed feelings was about 10%. Not really a shock. I think that's you could kind of take that and apply that to probably everybody about AI.
Very normally distributed.
What is your response to AI, Rabih? Where would you fall on this?
Oh, I'm definitely and generally optimistic about the potential.
Yeah, I am too. I'm number 1 and 2 for me. I'm optimistic, and I look at it as a tool. It shouldn't replace, everything, but it's definitely something that's powerful. You and I talk about this all the time of how powerful it is. Okay, I think that we'll end it there. The state of the dental economy. I think hopefully it's helpful for people to hear that. We can even post the link there. It's the ADA and Health Policy Institute. So, Rabih, anything else you want to add on any of that?
No, it was great.
Kind of uplifting for you and enlightening?
In line with what you'd expect. Like, there hasn't been a change of trend in anything in the industry. What we've seen in the last couple of years is continuing to do. Which means, as a dentist, if you continue to do what you're doing, you're on the right path, whether it was your client or patient experience, whether how you run the business or how you manage your finances in terms of like dealing with DA. If you keep doing what you're doing, you're on the right path.
Yeah, I totally agree. I mean, I think we're seeing the squeeze for sure, the fiscal squeeze. They call it, where reimbursements are lower, they've got less control, which is why we're seeing a ton of dentists talk about moving out of network and trying to raise their fees. And it's been tough. Like, inflation within the dental space, especially on the staff side, has been tough. So we totally understand that. But I think overall, still positive trends we're seeing in the dental space. So it's great. Okay, Rabih, anything else just in general we've talked about?
No, I did pull up a consumer confidence and stock market chart, and I shared it with you. But let's tease it for next week.
Okay, let's hit it next week. I like that little tease. I like that. Okay. All right, Rabih. Well, I'm going to go get back to, I will say this. It is shocking what you can rent from Home Depot. It is insane what they will give you. And just like, you just drive off with it. It's like, here's this massive piece of equipment that you probably need a license to operate. No tutorial, nothing. I just got a little mini excavator, and I'm going to go play with it. I'm going to go have some fun with it. So
you're reliving your 10 years old, exciting,
I'm like
fun moment.
Genuinely excited to go get on that thing and go dig up some stuff. So I'm going to go get to that. So
I'm waiting for the YouTube channel. Man. Yeah. Home renovation YouTube channel.
There you go. I'll end up on a fails channel, I'm sure, on YouTube. So, okay. Well, everyone, if you're still listening, appreciate you being here. Hopefully it's helpful. As always, this show is brought to you by Dentist Advisors. If you are needing help with anything to do with your finances, money, investing, taxes, accounting, we are here to help. dentistadvisors.com. Click on the book free consultation button. Talk to one of our friendly CFP dental specific advisors today. We'd be happy to help you. For now, Rabih, thanks for being here as always, sharing your words of wisdom. Everyone, thanks for listening. That was our 2 cents. Till next weekend, take care. Bye-bye.